What is good, Tesla family? It's Ray J back with another video, and in this I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what's going on with the overall market, what's going on with the debt ceiling, and how it's going to affect many other tickers from Nvda to Meta to SPY to QQQ and many others like that. I'm going to break down what's going on with Tesla's inventories, what the data is telling us. I'm going to talk about how this may affect Tesla's share price for tomorrow and beyond. Before I break anything down about what my Tesla price prediction is for tomorrow and what's likely going to play out, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. The offer ends very soon, in just about a week from now, so check it out before they run out. With that out of the way, let's get on with the video. Tesla was up 1.84% for the day, closing just at where the upper Bollinger Band happens to be, and that tends to be a very strong resistance zone. Now, that does not guarantee that Tesla has to get a downtrend from here, but it does cause the TA to suggest that's very likely. However, the bigger factor affecting this is going to be the debt ceiling. And I have some transcripts for you guys. I'm going to read what Joe Biden just said alongside Treasury Secretary Yellen. And they said some very important things this morning that will affect the whole market. First, let me just talk about yesterday. As far as my day went from yesterday, I did not upload any YouTube videos because I was very busy. I had some plumbing issues I had to deal with, and luckily I fixed everything. And then I had to buy some parts for my car, and I had to fix my PC. And I also had to fix some blinds in my household. So I had a lot of work to do, but I spent most of my day just dealing with all of that stuff. And then I just took some time off, hit the gym, and just relaxed a little bit just to take a small breather before I come back. And I'm back now, and not a whole lot really happened since Friday, but we got some new updates on Joe Biden's opinions on the debt ceiling. The debt ceiling is going to be very serious. It's going to be very impactful for the markets. Okay? Right now, things are starting to shift. In the beginning, Joe Biden and Kevin McCarthy were talking and shaking hands, talking about a deal closing very soon. It was looking pretty good in the beginning, right? And that was awesome to see for the American people, awesome to see in general. But as time goes on, as time has progressed, things are starting to change as more politicians are just playing dirty politics and they're continuing to argue. And I'm so far, as of right now, I'm not seeing much progress being made. Now, I'm not trying to be pessimistic here. I just want to tell the truth. It is possible for them to close a deal. If they do close a deal today, that's going to cause the market to rip to the upside. That's a real possibility. But so far, based off what Joe Biden said, alongside many other congressional members, I'm not really seeing that for now. I don't think it's very likely it's going to happen. I'm just going to read some of the transcripts from today from my phone. So Biden said that he is looking at the 14th Amendment of the Constitution to lift the debt ceiling. The question is whether it could be used in time to prevent defaults. And he says he believes he does have the authority to use the 14th Amendment. He said he's willing to cut spending, but we also have to look at tax revenues. Biden also said, and I quote, "We will not agree to a proposal for a tax break for the oil industry." Then the headlines came out and said that Biden says Republican debt ceiling offer is unacceptable, which is true. Biden says he won't agree on bipartisan debt deal solely on Republican terms. Then Biden said that I have done my part for the debt talks with the proposal that cuts spending. I won't agree to a proposal for a tax break for the oil industry. Oh, he repeated that. And then he said that he will speak to the House Rep Speaker Kevin McCarthy during his flight back to the US, and he reiterated that he believes he has authority to use the 14th Amendment. Now, after he spoke, after Biden said all of those different things, he's really trying to address his authority and just do things like that. But so far, I mean, there's still a lot of arguing going on. Biden said he's not agreeing with every single term Republicans are standing for right now, and the arguments are continuing. But then Janet Yellen came, and what she said is very important. I'm going to actually quote her, by the way. Janet Yellen said that, and I quote, "Early June deadline for the debt ceiling limit is still holding." She said that she also said that there are revenue suggestions that would make the tax code more fair. And she says that the GOP proposes to reduce IRS funds. That is very concerning, in her opinion. And she said other things like that. But the bottom line is, she said that there's a lot of legal uncertainty and tight time frame complications due to the use of the 14th Amendment. She said that in response to Joe Biden. And she stated that there will be hard choices to make if the debt ceiling is not increased. And she's reiterating they need to continue to raise it. They need to do it as soon as possible. And the June deadline is still a hard deadline. There are going to be lots of complications and an even more severe recession if they don't deal with it. So Janet Yellen is saying that. Could she be telling the truth? The answer is not entirely. And here's why. I believe she's correct, though, and I think I agree with what she's trying to do here. Janet Yellen is basically, before I say that, though, let me just mention that the US government, in my opinion, has enough money to last until like July. Uh, they're going to survive, right? They're going to survive even if they don't, like hypothetically, even if it takes them much longer to close the deal. But Janet Yellen, however, is being very stern and she keeps saying there's a hard deadline. Why is she doing that? Because she's using scare tactics. She's trying to scare many congressional members and incline them, incentivize them to close the deal as soon as possible because she knows how serious this is and she knows how slow the government can sometimes be. Not saying that they're not going to get it done quickly. I'm not trying to imply that. I'm not trying to be negative. I just want to say the truth. And then Janet Yellen is also trying to get as many people on board with the proposition and an agreement to get through Congress as fast as possible. She's using this to scare them, and she's using this as a tactic to incline them. And many people in Congress are using this deadline, and they are believing it. So it's a good move she made. I do agree, and I think that hopefully it works out. Hopefully this inclines a deal to be closed even quicker. Now, as far as Tesla goes, let me just note that the whole market is going to be impacted by the debt ceiling situation right now. The entire market, even Tesla, right? Even like Nvda and all these different companies. Now, sometimes these companies could have new pieces of news or earnings, like Nvda has earnings this week. That's going to be like an external factor, an even bigger one for some of them. But for the most part, one of the biggest things for the large majority of these companies is going to be this debt ceiling. And so far, progress has not been made, or not a whole ton of progress. We're just continuing to see talk and talk and talk. And if they keep playing dirty politics, this could get dragged out even longer. That's just a hypothetical. And if that's the case, that would not be the best for the markets. But if they do close a deal, then that could be good for the markets, right? So we'll just have to wait and see. I will talk more about that in just a couple of minutes. Let's just talk about the trading calendar right now. We have Bullard, Barkin, and Bostic all speaking from the Fed. I don't expect their words to be as significant right now because more eyes are going to be on the debt ceiling, and they already spoke so much last week in anticipation of Jerome Powell. But they are going to be speaking. They could say a couple of things that move the markets a bit, but I don't expect it to be too significant right now. That's going to be for Monday. Then for Tuesday, we have more homes data. We have the PMI report. That's going to be very important for recessionary indicators and lots of building permits data. So that's going to be important for Tuesday. But for tomorrow specifically, we have some Fed speakers. Then on top of that, we have earnings coming out. We have Zoom coming out for Monday. Nothing else too big. Then we have on Tuesday Lowe's, Dick's Sporting Goods, AutoZone, and a couple of other ones. For Wednesday, we have a big day. We have XPong, Kohl's, and then Nvda. That's going to be huge for the stock. It's going to be big for the market, so make sure you're ready for Nvda. Then for Thursday, we have Best Buy and Costco, lots of retail coming out like Burlington and a couple of other ones. And then we have Big Lots to end the week of earnings for Friday. The biggest day is going to be Wednesday. Make sure you're prepared for that. Now, looking at the news that's coming out affecting Tesla, the news is reiterating some of Elon Musk's big points. Elon Musk was talking about the Cybertruck, and there was a lot of news that came out involving it last week. Musk mentioned that the Cybertruck is a very hard car to make because it's such a radically new design, and they had to basically reinvent their manufacturing methods to just build the exoskeleton, and then a lot more other things from there. That is going to be very good for Tesla's future. Musk is saying that they're making very, very good progress nonetheless. Musk mentioned the production target is going to be 250,000 and up. That's once again very bullish, at least for the long term, and that's part of why Tesla pumped this week. Musk did say this not too long ago. Now, on top of that, Elon Musk talked about the importance of us being patient because he did warn us, right? And I want to remind you guys of the macroeconomic factors that affect Tesla. The recession that's likely going to come very, very soon, if not is already here. Musk is warning us, and he said the next 12 months may not be the strongest for Tesla, but after 12 months, by 2024, things are going to be much better for Tesla's share price, for Tesla's performance, and he's expecting very, very strong returns by then, much stronger than like this year. And he thinks we're going to see a massive explosion in their growth by then. Okay. Now, on top of that, we had some other news that came out. Another investor, they basically are holding a large amount of Tesla and they're very bullish for the long term. This came out on the news. I consider this good news. That was Ross Gerber. Good news. He's one of the co-founders and CEO of Gerber Kawasaki Wealth and Investment Management, and he holds about 420,000 shares of Tesla stock. Maybe Elon Musk and him had a deal on that. It's pretty funny. But anyways, that's pretty good news for Tesla. So far the news has been pretty positive, and I'm still very bullish for Tesla's long term, of course, guys. I know a lot of people get confused, and they oftentimes hear me talk about some downside for the markets in Tesla. And yes, that's because of current macroeconomic events. That's because we are in a recessionary environment with high or higher than before interest rates. However, let me make it clear, I'm still a mega Tesla bull. I think it's going to squeeze to all-time highs pretty quickly over the next couple of years. And I'm still very positive, okay? I just want to make that as clear as possible for the people that are not really liking some of the things I say. I want to be honest. The best thing for me to do is to be honest. As far as the inventory levels go, the Model 3 has seen inventory levels drop over the weekend, go up just a tiny bit to about, I think it's close to about 750. 751 was the latest one, a little bit above that. That's a big drop compared to when it was at about the 835 level. Tesla did cut some prices on the Model 3. They offered more discounts, and that's part of why we saw this drop right here. That is good news for Tesla. However, looking at the Model Y, we did see inventory levels go up a bit over the weekend. They went from being around like 100 to 120 all the way up to about over 200, but they are dropping a little bit. Let's hope this continues to drop. The Model Y is very, very popular, and I see this as a very big uh, car for Tesla's future. Elon Musk said the same thing. Now, anyways, looking at the technicals, Tesla has a relatively high price-price ratio. It has been outperforming the market as of recent, and we are seeing it outperforming SPY, at least for Friday and many days before that. On top of that, looking at the very important support zones and resistance, we have quite a bit of resistance around 181. It's not extremely strong, though, compared to about 184. And then we have support. The next major support is going to be around 177. Not as significant as something like 175 around that zone, but it is still the next major support to watch for. Tesla was stated as a stock that's going to outperform the market according to Wedbush. And then as far as earnings goes, Tesla tends to perform. It actually performed as expected during the last one, but it tends to do very well. So expectations tend to be high for the stock. Mondays tend to be green about 53% of the time for Tesla. That's a good thing for the company. And May tends to be an okay month for Tesla. They're only green about, I think it was close to about 54% of the time. June tends to be stronger for Tesla, but that's going to depend a lot on the debt ceiling and also the inflationary numbers that come out because markets are expecting, if you look at the Michigan consumer sentiment reports, markets are expecting another uptick in inflation. So we have to be careful for the month of June because it will affect the whole market in Tesla. As of recent, Tesla has seen very strong price action during now the second hour, also during the fourth hour, and then finally during about the fifth hour. And I would say the sixth hour tends to be a little bit strong too, but the what is this, the second one, the fourth and the fifth tend to be the strongest hours for Tesla. Finally, the short interest on Tesla has exploded to 42 million shares. The shorts are just trying to load up on Tesla. They're shorting the hell out of it, and they're going to try to smack it down. So I want to warn you guys that this is a little bit concerning to me because Tesla's at heavy resistance. We're at the upper Bollinger Band, and now the shorts are just doubling down. They're piling in, and they're going to try to manipulate Tesla. I want to warn you about this. I'm not saying it means Tesla has to drop more. If we get good news from the debt ceiling, Tesla has the potential to short squeeze. That's the good thing about this. And to some extent, this is like a little good because it could cause a massive short squeeze. The bad news, though, is the shorts are not going to like lose easily. They're going to fight hard. They're expecting something. It's almost as if they know something, right? Maybe they know something. Maybe they had a plan. And I would be very careful because of this. we saw a total of about 42 plus million Tesla shares shorted in just one day on Friday. That's the highest level of Tesla shares shorted we've seen since February of this year. Tons of Tesla shares are being shorted. Very important to note. 136 million was Tesla's volume, pretty nice volume. But looking down here, we saw another spike in the short volume at about 67%. So a lot of the volume involved shorting and selling pressure. And also, we saw lots of shorts just getting ready to pile in. Now, one of the things that the shorts do is they let the market go up. They let the market squeeze so they can start repositioning. They can start re-entering their short positions. Could this be what they're doing? Could they have been doing this the whole time, letting the market pump to start shorting the market down because they knew something about the debt ceiling? Could this have been their plan? It's a possibility. And I do believe the odds are favoring that. However, I can't say it with 100% certainty because I don't know what's about to happen with the debt ceiling with super high certainty. That's why I'm going to be very open-minded, but I'm going to warn you guys about how risky the market is at these high levels. And let me explain. So Tesla's at the upper Bollinger Band, okay? Let me zoom out of this just to show you what I'm talking about. When we zoom out of Tesla and we actually look at how it performed relative to these price levels, we hit the upper Bollinger Band like right here. This is like back during September of last year. We rallied up here. We actually stayed above it for some time. We pushed up here, we came down, we pushed and touched and came down, pushed and touched, then we came down, touched it, came down, touched it, came down. There were some instances where Tesla was so undervalued, such as when it was back at like $100 when Elon Musk was selling the shares. Tesla started to push up, but it just kept going. It kept squeezing and squeezing and squeezing after the strong deliveries numbers and also the strong earnings that came out. So that helped Tesla just, absolutely pump, right? So this is one like anomaly where Tesla kept going despite hitting the upper Bollinger Band. But besides that moment, right, we came close to it here, we got rejected. We came close to it here, we slowed down a bit, then we touched it and rejected. And then right here, we're getting very close, we're actually touching it. Typically, we get rejected when we touch it, right? When we hit this upper Bollinger Band. Am I guaranteeing it? The answer is no. It depends on the debt ceiling. However, when you look at SPY and QQQ and many other factors, the odds are favoring the market cooling off very soon. Cooling off because it is overextended, and it's more likely that that's going to happen. However, like I said before, let me just reiterate, always be prepared in case some good news comes out about the debt ceiling. I'm actually hoping that happens because it's going to be the best for this country and the people that are part of it. But now let's break down these numbers, okay? If Tesla's really bullish, if Tesla keeps pumping and pumping and pumping, right? The next important level is going to be 184. Then we have the 187 to 188 zone. 184 specifically is going to be very important if Tesla does get a rally off the debt ceiling. If we don't get the rally, if the market rejects, Tesla is going to make its way all the way down to 174.95. Okay, first there's 177, of course, then there's 175-ish around that zone. In my opinion, okay, I will break down Tesla a little bit later by giving you guys specific details about this, but it could try to pump a little bit more before it gets a rejection, and the odds are favoring that from a technical standpoint. But once again, always be open-minded because it depends on the debt ceiling. I'm just saying that the odds favor Tesla getting a cool-off because of the current situation. Now, I'm going to talk more about Tesla in just a couple of minutes, but I first need to talk about the markets. If we're bullish on SPY, it's going to pump all the way up to about 4. If it breaks 420, then it's going to reach 425 to 426. If it breaks and holds 420, it failed to do so far. We also have a potential reversal candle in the daily chart, and we are at the upper Bollinger Band, right? That tends to mean that we're quite overbought on the smaller time frames, and the odds do favor us cooling off. I also want to note that on the 1 hour time frame on SPY, we have a bearish divergence that developed right over here. And when that happens, we tend to see the market get rejected. It got rejected so far. On the 1 hour time frame, it's near the lower Bollinger Band, so it might try to bounce a little bit, which tells me the market might try to bounce a bit. But then, if we don't make much progress on the debt ceiling, we could just continue to slide to the downside, and SPY can make its way down to about 415, then the 412 area, which is closer to the 50 EMA on the daily chart. So the 412 becomes more likely. The odds are favoring a technical, pullback, but always be open-minded just in case. I'm just talking about the most likely possibility. Now, if QQQ is bullish thanks to the debt ceiling, we're going to see the 340s, okay? That's a possibility. If it doesn't happen, the QQQ is going to make its way down to where I believe the 50 happens to be. Right about here, we have, not the 50, sorry about that, guys. The 5 EMA is at 332, then we have 330, then we have this gap right here about at 327. We're likely going to make our way down to 330 or lower if we don't get much good news from the debt ceiling. That's very likely right now because the technicals are suggesting we're very overbought. QQQ is at 71 on the RSI. The odds favor us cooling off more from here, but I'm always open-minded just in case. Okay. As far as let's just talk about the Nasdaq real quick. The Nasdaq also formed a bearish divergence in the 1 hour time frame, I believe. Right about here. Actually, it doesn't have it. Let me double check this. I think it's very close. Actually, it does have it. Sorry about this. So we do have a bearish divergence technically on this time frame, and that's part of why the Nasdaq started cooling off for Friday. I did talk about that being most likely what would happen. Now, if this does continue to play out, the odds favor more downside. We could try to bounce a little bit first since we are very close to the basis band. So we might try to bounce a little bit and then just get the sell off as time goes on. And I think that's what's going to happen if no new progress is made on the debt ceiling. But if they do make progress and the deal is closed, we could always rip to the moon. Always be prepared for that, okay? So, does that make any sense? Let me just explain this one more time. If the good news comes, the market will rip. If we don't get the good news about the debt ceiling and things remain as is, if they don't close the deal and they just continue to argue, then the odds heavily favor downside. Uh, the technicals also tell us downside is much more likely. Okay, so the odds are favoring downside is much more likely, but always be prepared just in case an unexpected piece of news comes out. As far as SPX goes, same thing. There was a bearish divergence, I believe, that developed. If I include, I don't think the extended hours were showing on this. Actually, they're showing. So we don't actually have a bearish divergence after all on the SPX. This didn't develop like I thought it did for a second, but we do have a potential bearish cross on the histograms where the PPO is. That tells me that we might still see SPX cool off and retest about this 4150 area over the next couple of days, if not by tomorrow. Might pump a little bit first and then just get a sell off over time. The odds do favor that. Okay. That's what I'm seeing for now, but I'm always open minded just in case we get a good piece of news. For the VIX right over here, it's not doing anything too significant, but it was actually retesting the lower Bollinger Band. On the daily chart, however, it's very close to where the lower band happens to be. So the VIX might come down to touch this lower Bollinger Band. When it touches the lower Bollinger Band, it tends to bounce. So like right here, touched it, bounced, came close to it, then we got a nice bounce. Right here, for instance, on the daily, right? We came close to the lower Bollinger, we bounced, came close to it, we bounced. We're coming very close to it, we might bounce soon on the VIX, which tells me the market could cool off a bit. We might pump a little bit more for the markets as the VIX has a little bit more potential downside. It is still possible for it to just drop a little bit more, and then the VIX bounces as the market comes down. The S&P 500 causes that to happen, of course. On the SQQQ, I think it invalidated the shorter term. Actually, no, it hasn't done that yet. It still has a bullish divergence developing, but it is getting very close to invalidating it. It's still valid, of course, but it's very like oversold right now, so it is due for a bounce. And I believe that this thing will try to bounce as it's at the lower Bollinger Band. We might see this thing bounce. It could come down just a little bit first and then get a really nice bounce. And that's what I'm seeing as the most likely possibility. The dollar index is still holding up nicely above 103. If it keeps holding above the 5 EMA and keeps going, that's going to be bearish for the markets. Please be open-minded for that. As far as Coinbase goes, this thing came down pretty hard on, I believe it was Friday. It might try to bounce off this basis band line. So it might try to make its way back to about 58 or so. But if it rejects and it keeps coming down to 56, which I think is very likely, you have to watch this like 56 area. If a 56 fails, you have to watch this 54 zone. If that fails, it's going to come all the way back down to the high 40s. So we have to watch the 50s very, very carefully. They're very important. Alibaba had earnings, and unfortunately, they missed on revenue, and Alibaba just came sinking down. It is quite, I think on the smaller time frames, it's oversold. Could try to rebound a little bit to get to about 85, and it might reject from there and then make its way down to 80. But for now, that's what I'm seeing. As far as Aapl goes, there was a rising wedge forming on it technically, but I'm not too worried about those patterns because they haven't mattered as much now. But there's a bearish divergence that developed on the daily chart on Aapl. Okay, so the odds are favoring Aapl might continue to downtrend from here. However, like I said before, it all depends on the news with Joe Biden and the debt ceiling. We are near the lower Bollinger Band on the 1 hour time frame, so it might bounce a little bit first, but the high might be in at 176. So it might bounce to where the basis band is around this 175 retest, 175.4, then reject and start making its way down to 174 and lower than that. That's what technicals are telling us. But like I said before, always be open-minded regardless. There's also a bearish divergence on the 1 hour time frame. look at that very carefully. As far as Nvidia goes, Nvidia looks pretty. It looks okay so far. It's not too horrible like other stocks. There is a bearish divergence that developed. It started selling off, and we are seeing a wide open MACD for now on the 1 hour time frame. On the daily chart, however, it is a little bit overextended, so it looks to me like it might try to cool off to where these imbalances are. Like I like to look at the 30-minute time frame for the imbalances. I'm gonna just double check where they happen to be. I think there's one right here. There's an imbalance right here at 303. So eventually it's gonna make its way down. It may take quite a while though. There's also this 308 level that's gonna be very important. What do I think Nvidia is gonna do though? It's in the middle between these Bollinger Bands. It might try to rebound a little bit first since we're about to get a bullish cross on the 30-minute. It might try to rebound a little bit, then make its way down moving forward. But then we are approaching earnings, right? I was just talking about Monday. Maybe it cools off a bit on Monday. As we approach earnings, we might see the video hold up and it's going to make a massive move. I'm open to either direction, of course. Earnings can be very unpredictable. And until then, we'll just see what happens after earnings. But I do anticipate the video might try to pop a bit and then cool off. That's what I'm still seeing. If Google is bullish, it's going to get to 125 plus. If we're bearish, it's going to break below 120. Looking at the charts, there was another divergence that formed right over here. It's been playing out so far. On the daily time frame, however, Google is very overextended at the upper Bollinger Band line. It might reject off this as we're very close to resistance and we are forming this rejection candle. So it's like a topping tail for Google as well. It could try to like pump a little bit, then just make its way down, but I do believe the odds favor it cooling off a bit. It's going to depend on the debt ceiling, but like I said, odds favor it retesting the 5 EMA, getting back to about 121, and then retesting 120. 10-year Treasury yield is pumping. When this happens, this tends to be bearish for the markets. So far, it's at this upper Bollinger as well. But what's interesting is it's been pumping with the market. That's the very strange thing about this. It looks like it might start downtrending from here, just a little bit to get a rejection to cool off. And what's interesting is the market's been running the same as the 10-year. So if that continues, then we might see this be bearish for the markets as well if it does get a rejection. Amazon looks like I said before, it formed a bearish divergence as well in the 1 hour time frame. The MACD is also kind of open. Looks to me like Amazon's going to cool off a little bit more. So this is the bearish divergence. We made a higher high in the price. The RSI is making this lower high. Amazon could try to bounce a little bit since it dropped quite a bit on Friday. It might try to make its way up to about 117, and then it might reject right there and just continue to downtrend. We might see this thing make its way all the way back down to where this imbalance was. There's one at about 113. There's another at about 110. We could see Amazon just continue to start filling those imbalances, and the odds do favor that. The algos are likely going to try to do that uh, over the next couple of trading days. But I'm always open to the possibility of the market pumping because of the debt ceiling. So I'm always open-minded. I'm just stating that the odds favor downside on a lot of these charts. Meta, it's in the middle right now. It might try to make its way up to about where this upper basis band happens to be, close to about 246. If it rejects from there, it's going to make its way down to about 243, if not a little bit lower. The odds favor Meta trying to bounce first and then getting the rejection from there. There's also this imbalance down here around this 240 area, so it might make its way down if it does downtrend. If it breaks below the 1 hour 50 EMA, then it's going to test this 140 flat, this 240 flat zone. I'm not sure why I keep saying 140. 240 flat zone. If it breaks below the 50, I think the odds favor that. So as far as Tesla goes, what am I seeing for tomorrow? I'm actually very, very cautious with Tesla because it's going to see more manipulation than before because the shorts are just piling into Tesla. Maybe they know something. Maybe they have a trick up their sleeve. Could they get squeezed out? It's a possibility. And that tells me a big move is coming to Tesla. If we get a deal, so far the odds are not favoring that based off what Biden and many of these politicians are saying. If we get the deal, however, Tesla could short squeeze to the moon. It's going to run hard, make its way up to like the 190s. If we get the deal like as soon as today, if the market rips up, Tesla's going to rip because of the high short interest. It's going to squeeze. But if we don't get the deal fails, right? The odds will favor Tesla starting to trade sideways and then cool off a bit. And because the shorts are piling in, they might try to smack Tesla down. I want to warn you about that. They like to manipulate lots of stocks and they like to manipulate Tesla. It's one of their favorite stocks to manipulate. So if Tesla does get the rejection, it's going to make its way all the way down to about this first off, we have 177, that zone right there, which is where the strong support is. Then we have 174.9. We might see Tesla pump a little bit to about a little bit more. It's about 180.5 and then make its way down, but the odds do favor us cooling off to the 177 and 175 zone over the next trading days. Now, that's what I'm seeing for the short term. With that said, I just want to thank you all for listening. Don't forget, I have some